Hello, Accounting One. This video is probably going to be one of my longer videos, so get ready, have a notebook, strap yourself in. The reason being is that I want to get you knowing the basics first. Okay, so the problem that I am about to go over is from your Pearson Accounting textbook, and this is what the problem looks like, okay? And the name of the company for Full Moon Products, okay? And it has a list of accounts. All right. Before we begin, we're about to go over the financial statements. The financial statements are compiled from different final numbers in the accounts. Also, before we begin, I want to look over to the board and I want you to know the 5 main elements. So these are the 5 main elements used in accounting. Now within these elements, there are account names, and we'll go over the account names that we're using in this problem in 1 minute. But before I begin, what I want you to understand is you will find a home in the financial statements for each of these individual elements. All right, so let's look at the last two, revenue and expense. You will learn that this will go on your income statement. Between the income statement and the balance sheet, you will figure out retained earnings. Retained earnings has its own account, but you will learn that it ultimately will appear under stockholders' equity. I'll show you that in a minute when we complete the financial statements. The last 3 elements you will learn will always appear on your balance sheet. Okay? All right, so now I'm going to erase that and let's go over the problem that we're going to work on. All right. When you're first learning, it's much easier to go through the accounts and label what element they will appear under. So the elements that I just erased: assets, liabilities, equity, revenue, and expense. You'll hear me refer to equity. It's known as stockholders' equity. It's just a quick name for me to refer to that element. But equity relates to stockholders' equity. All right, so let's look at the practice problem that you're going to do. The first account is equipment. That will be an asset. Next account, interest expense. It ends in the word expense. If it ends in the word expense, unless it has the prefix pre, it will always be an expense. So interest expense, right, label expense. Interest payable ends in the word payable. Any account that ends in the word payable will always be a liability. So label that, liability. Accounts payable, liability. Salaries expense, expense. Building, asset. Cash, asset. Common stock, under stockholders' equity. Land will be an asset. Note payable, liability. Property tax expense, ends in the word expense, it's an expense. One more time, unless it has the prefix pre in front of that. Rent expense, expense. Accounts receivable, asset. Service revenue, revenue. Supplies, asset. Utilities expense, expense. Okay, then it tells you down the bottom of the problem, the beginning retained earnings was $364,800. We'll do something with that later on. Dividends declared and paid totaled $108,000. Okay, here's what it's asking for this problem. So this is going to be a long one, but I feel that it's good for you to really get the whole gist of the chapter by doing this problem. All right, prepare the income statement of Full Moon Products Incorporated for the year ended December 31st. We are only doing the income statement first. We will go in this order, so write this in your notes. We will always complete the income statement first. Second, we will complete the statement of retained earnings. Third, we will always complete the balance sheet. Okay? All right, so we're going to go in order. The first financial statement we are going to complete is the income statement. On the income statement are only revenue and expenses. No other accounts, names that are under the other elements will appear on the income statement. All right, so let's do the name of the company first. It's Full. I'm going to try to write up large on my whiteboard so I can fit this. I'll try to fit this whole problem on my whiteboard. So we have Full Moon Products Incorporated. That's the name of the company. Here's the financial statement. It's called the income statement. Here's the date. Pay attention to this. The date, year ended December 31st, 2018. Why the difference in the dates? The balance sheet you will learn, you'll just use whatever that date is. So balance sheet, you will just use December 31st, 2018. Income statement is only used for one period, so you will always label it year ended or for the month ended. Never just label it December 31st, 2018. So if the lab is marking you wrong, it's because you just put in that date, all right, for the income statement. It's only used for one period. You will learn in chapter 3, it gets closed out to the balance sheet, but we're not going to go there today. All right, so we're going to first list our revenue. Okay, the name of the account is service revenue, but the element it's under is revenue. So service revenue, and then you put in your amount, put it way over here because this is your final number, $451,600. Let's get a dollar figure. All right, next you will have your expenses. So revenue is what the company is selling those products for. That's the money, that's the not their ultimate amount they earned, but that's what they're selling those products for. Expenses are the costs of doing business. So just like us, businesses have expenses. They have salaries expense. A lot of times in class, traditional students think salaries expense is an asset. Unfortunately, employees wear an expense. So salary expense. Okay. Now this we're going to do to the far left because we're going to add a few things up. This is not our final number. Okay, next we're going to have rent expense. Which is $41,000. Just get the numbers right from the problem. Interest expense. And that will be $10,000. Utilities expense. That will be $8,100. And then we have property tax expense. And that will be $7,300. Okay? We're going to add all of those numbers up, and that will equal our total expenses. So that will go in this column over here, 175, 300. That's your total expenses. All right, now to get your net income, it is always your service revenue minus your expenses, and that will equal 276, 300. Now, when you're working in your notes, you can show your expenses as negatives. However, do not show that in the lab. Just show them as positive, but make sure you subtract those. All right? Show those all as positive. So that's your income statement. You will do that number one. Okay. I wrote too big, and I do that a lot. All right. Number two, we're now going to do the statement of retained earnings. So we're going to have this exact title. Here's the title. Same as income statement. You get the point. All right. We're going to start with retained earnings. Now be careful, everybody. This is the beginning retained earnings. So in this particular problem, where the year end is December 31st, 2018, the beginning retained earnings, not going to say beginning, it will just have the date, is December 31st, 2017. That's the year before. So that's what we begin with, retained earnings, December 31st, 2017, okay? And we have 364,800. Next, look at what we're going to do. We're going to take this number, the net income is going to go right here. All right, so that's why you do the income statement first. You will add, in this case, this is a net income. You will add it. If it was a net loss, you would subtract it. But this is a net income. Your revenue was more than your expenses. So add net income. And that is 276. Right, be very careful. Don't transpose your numbers. 276, 300. Okay, next, I'm going to do a subtotal. You're going to add 364, 276, 300, and that will give you 641, 100. I'm running out of room. All right. Next, we're going to subtract the dividends. And that will be 108,000. Okay, that you can show as negative. You can show that as negative in the lab. All right, and then I can't fit it. Your final retained earnings. Let me draw a line. Your final retained earnings, you will take 641,000, subtract 108, and that will be 533,100. You will label that retained earnings December 31st, 2008. That is your final retained earnings. Okay. I am going to erase now. And remember, just so you know, this number, this 364, came from right here in your problem. It said beginning retained earnings. If it has beginning retained earnings, then that's an existing business. If you're working on a practice problem where it says the business has just started out, or it doesn't give you any retained earnings, the beginning retained earnings balance is 0. And what that means is the business is just starting out. Okay, so they do not have an existing balance. So remember that for your notes. but the final balance in retained earnings is $533,100. Okay, I'm going to erase because I can't fit the balance sheet. Okay, so the order we complete the financial statements again are income statement. Oh, I should have kept that. The balance sheet. Income statement, the statement of retained earnings, and the balance sheet. That's what I get when I'm trying to do a million things at once. Okay, name of the company. Here's the financial statement, balance sheet. All right, everybody watch this date. The balance sheet is a year-to-date figure. It's a picture of a company's financial statements at this point in time. So your date is just December 31st, 2018. The balance sheet will only include assets, liabilities, and equity. Only account names that go under there. All right, so we're going to start with assets. All right, let me tell you this. In the United States, and yes, the lab will mark you wrong. In the United States, we list our assets in order of liquidity. What does that mean? That means how quickly the account can be converted to cash. Well, that's why cash is always first on our financial statement. All right, we're going to have cash, which is $46,000. Next, you'll have accounts receivable. Accounts receivable is telling you you need to receive money from customers. So accounts receivable will come next. And that is $85,000. Next, we will have supplies. And that is $6,200. Next, we will have land, and that is $29,000. Next, we will have building, and that is $405,000. Next, we'll have equipment, and that will be $115,000. We will total those, total assets, and that is $686,200. Draw that, okay? Now we're going to go to the other side of the equation. And we have liabilities. Here's the account names. Accounts payable. And that is $25,000. We have interest payable. Remember, always ending in the word payable. That's a liability. Remember that. Okay, then we have note payable. And that is $99,200. It will have you do a total liability column. You will total these liabilities, and then that will give you $127,000. All right, now watch this. We're going to do stockholders' equity next. Here's the accounts that go under stockholders' equity. Common stock. That's the stock the company has issued, is $26,100. We have retained earnings. Everybody watch. I'm going to do this one in red so everybody pays close attention. Retained earnings. We're going to go back to our statement of retained earnings, And we figured out 533,100. That's where that number comes from. That's why you go in order. Income statement, that flows through the statement of retained earnings. You do the income statement first. Second, you'll do the statement of retained earnings. Income statement flows to the statement of retained earnings. You have other accounts on there, dividends. You have a beginning retained earnings. Then you'll figure out the final balance. The final balance of retained earnings flows to the balance sheet. 533,100. So a lot of times when I test in class, students saying, oh, my balance sheet's not coming out, I can't figure out. Oftentimes they forgot to extend their retained earnings to the balance sheet. Okay, so remember, you get that from your statement of retained earnings. You will figure that amount out. All right, I'm going to use my black marker again. Now you're going to have total stockholders' equity. Now remember, this is total stockholders' equity only. Okay, not including liabilities yet. So you're going to take 26,100 plus 533,100. That gives you 559,200. All right, now to get total liabilities, and this is the label. Always get in the habit. When I test, I want to see total liabilities and stockholders' equity. And stockholders' equity is 686,200. Right? Let me double underline that number. All right, look to where that comes from. You're going to take total liabilities plus total stockholders' equity, and that will be your total liabilities and stockholders' equity. When you're done, your total assets must always equal, draw a line, your total liabilities and stockholders' equity. Okay, so be careful when you work on these problems. That's your balance sheet. All right, this particular exercise has questions. All right, here's the question. Let me read it. Okay, number 4. Was Full Moon profitable during 2018, and by how much? When you have a question on whether a company is profitable or not, you're going to go to the income statement. The income statement is revenue minus expenses. That will equal your net income or net profit. Okay? So your answer is Full Moon Products was profitable. Yeah, you got a positive net income. Net income was $276,300. Here's the question for B. Did retained earnings increase or decrease, and by how much? All right, so your beginning retained earnings was $364,800. You ended retained earnings, you figured that balance, which is $533,100. It increased, right? You had $364,800, it's now $533,100. It increased. Take the difference between the two and increase by $168,300. So take your difference between the beginning, $364,800, subtract out your ending, $533,100, and an increase by the difference, $168,300. Okay, here's the next question. Look at the balance sheet. Which is greater, total liabilities or stockholders' equity? All right, so let's look. Here's my total liabilities. Here's my total stockholders' equity. So total stockholders' equity is greater. So who has the greater claim to Full Moon's products? It's creditors or it's stockholders? Well, guess what? The creditors are in your liabilities. Liabilities are all your creditors. Stockholders are owners. So the stockholders own more of this company. So stockholders have greater claim. All right? And I told you that was a big problem, but that's an important problem for you getting used to financial accounting. Please go back, read my PowerPoints, make sure you get used to those account names. And remember, they're all going to work around those 5 main elements: asset, liability, equity, revenue, and expense. Okay? I'll see you soon. Get in, work hard in the beginning. I promise you, if you keep at it every day and don't wait till the last minute to do your homework, you'll do well in the class. I'll see you soon.